Well, it's about time. Some good news for home buyers. Stubbornly high mortgage rates continue trending down. Again, it's a trend. They're still high, but they are falling to an 11-month low this week, 6.35%. Much needed relief. Americans who moved in 2024 are facing the highest monthly mortgage payments in decades, and it keeps getting more expensive to own a home. A new survey reveals home ownership costs rose 26% since 2019. Mauricio, this is your baby here. Is this move, and again, I don't want to discount its importance. It was over 7% just a couple of weeks ago. Now it's 6.2 or 6.3. Is it enough to really move the real estate market?
It's not. We need to continue to make housing more affordable. It's too expensive right now to own a house. The American dream of owning a home is impossible for any normal person earning a normal living to afford buying a home and to living in it. That needs to occur through multiple different fashions. It has to occur through lowering of interest rates. I think that's super important. But there's also some tax benefits that I think that are out there that we can do. We are experiencing right now, for 3 years in a row now, the lowest transaction volume in real estate transactions that we have seen since 1994.
Ooh.
Okay.
Wow.
So when you realize that, that's when you realize that there's just nobody's moving. And why is nobody moving? Because they can't afford to buy. And they also can't afford to sell, because the people that are selling are coming off of really low interest rates, holding on to really low affordable pricing, and they can't afford to go into something new, something better, something bigger. Even if they're
with a mortgage that's 3 times what they're paying now.
Even if they're downsizing,
right,
they're still paying more for their home. With the new mortgages than they were before, right? So we just need to find that balance. We need to find that middle. We need to promote home ownership. We still need to make it more affordable.
Yes.
And that, at the end of the day, that's the bottom line. The triggers, fortunately or unfortunately, are interest rates.
And Jackie, we're trying to rebuild the family in this country, which has been through a lot over the past couple of decades. One way is to have, when a married couple invest in a house together, that brings them together. And I know a lot, including members of my family, who are, both of the parties are working in the house. They have kids. They have an income of 6 figures, $200,000, and it's still not enough to buy a house.
Yeah, and a lot of young families believe that they shouldn't really start their family in earnest until they have a place to live. That's not everybody, but that is some people. And so that affordability then becomes an issue. If we can't afford to have a place to live, to raise children, should we have them or not? It starts to get into greater philosophical issues. But what's interesting to me is I look back during COVID when the mortgage rates were low and the prices skyrocketed. The demand was out there in the suburbs. Everyone wanted to leave crowded cities or go to greener pastures, and they did. The prices went up, and I understood that. Then when the mortgage rates went up, I expected the prices to come down because historically that's what we've seen. Yet for some reason, many of the sellers are being obstinate. I suppose it's to your point that they can't go buy something else. Even if they're downsizing, they'd be paying more than they would if they stay in their bigger house. And so that creates a really strange quandary because a lot of these people can afford to stay put. So they put their house on the market at their dream price. They don't get their dream price. They pull it off. So what will be the catalyst to change this? Is it going to be rates dropping?
There's multiple things that are going to be happening, and you're so right. During COVID, what we had 2 things. We had one which was low interest rates, but we also had an infusion of a lot of money. Mm-hmm. Okay, both of those things created for people just to start buying, and then they're holding on to these incredible interest rates. Now you had the interest rates rise, and then you had no supply. The law of supply and demand didn't match, right? There was some demand, also some low demand because they were also hanging in there. But now we've got a pent up demand. Okay, so on the demand side, we're actually starting to get into a good situation. The supply side, we're still tight. We have no supply. The way we're going to unlock supply is by lowering interest rates just a little bit. Okay, I'm not suggesting that interest rates should be back at 2% or 2.5%. That was probably a wrong level anyway. But we definitely need to bring them back down so that there can become some affordability. When you get that combination of demand with a little bit more affordability, the other thing that has started to happen is that prices have actually dropped. It's not showing. The median price has risen a little bit, but overall, in general, the prices have actually started to drop. That hasn't hit the numbers yet. yet. It will hit the numbers. I promise you that. I remember when I was on with Varney, and I talked to him about the recession about 3 years ago, and he goes, "You're calling a housing recession? You just use the R word?" And I said, "I am," and we were. But I promise you that that's going to start happening.
Well, Lydia, another thing that's changed with the pandemic, we saw the price of government increase by 50%.
Wow.
A 50% increase in the amount of money our economy was being used to pay the government. A lot of that went to emergency payments that were supposed to time out. They didn't, because we had the Biden administration come in and kept that level of spending, that 50%. We've never had an explosion of increase like that, perhaps during World War II, but even then it didn't match this percentage rise. Don't we have to tackle that? Isn't that part, the big sucking sound you hear is the government taking a lot of capital out of the private sector?
It would seem to me that that absolutely needs to be addressed. And it sounds like that's also a work in progress, because that's a hard Band-Aid to pull off. But I think that's also why the Trump administration talks about growth and finding other ways of generating some revenue, right? I kind of come back to this thought about when I think about locally real estate and supply and demand. I'm living in New Jersey, which is an incredibly competitive real estate area with high prices and the high interest rates. When I think about the interest rates now coming down, David, I think, great, that is some relief that's been that we've all wanted for so long. But my worry, Mauricio, is that the interest rates coming down, that gives the current homeowners who maybe bought over the past couple of years an opportunity to refinance. So good for them, right? They bought the home and they dated the rate, so to speak. But what does that mean for prices? I know that you have some optimism that prices are going to level off or come down. But my concern, especially in the state of New Jersey and some other competitive districts, is that it's just going to force prices up even higher. People that have been waiting on the sidelines and are going to get out there, and we're going to see a voracious market yet again.
We need to unlock supply. There's two ways to unlocking supply: lowering interest rates and letting some people that want to sell because they're holding on to that. And the other one is to build new homes, right? We need to create both incentives in order to create supply. And if you can balance supply and demand, you're going to see affordability through interest rates and through price drops.
Adam, New Jersey was just mentioned as a place where housing has exploded.
Yeah.
The year that I was born,
Right.
a long time ago, my dad had a house in New Jersey, in Dumont, New Jersey, Bergen County. He'd commute to Manhattan every day. He had 2 kids and a wife who didn't work. He had my grandfather who lived in the basement. All was being paid for with a salary of, you know how much?
How much?
$3,500 a year. Now, of course, there's been inflation. That
$3,500?
$3,500. That translates into $42,000. In what universe could you buy a house, have a car, have 2 kids, a wife who doesn't work, and a grandfather stay with you at $42,000? Certainly not in any suburb of Manhattan.
No, well, I mean, healthcare for a family of 4 alone would probably start to approach that number. I mean, it is absolutely crazy. And so, I mentioned I'm recently married, and so a woman from Dallas, and we go down to Dallas and just love it. We thought, I wonder if we were to move to Dallas, could we save money? Nope, can't save money. And then we were down in Miami, and we looked at Coral Gables, probably an area you knew well. Mauricio, nope, can't save money there. What about Mountain Brook, Alabama? I've got friends there, and it's beautiful. Well, it's expensive too. Yeah. I mean, there are just no bargains. I don't know how this has happened, but it's insane. If you want to buy a nice home, I don't care where it is, it's expensive.
Well, it involves the restructuring of the American economy, which is something that President Trump says he's going to get involved in doing. I mean, bringing a lot of the work, the factories back home to America, and that just might change the whole economic perspective of things. Folks, stay with Fox Business. Jackie DeAngelis is going to be hosting Maria Bartiromo's Wall Street Tonight. That's at 7 p.m. It's a Friday night. Put your TV dinner by the TV itself and watch it. We got a big lineup. You don't want to miss it.